Three warning signs are flashing in the stock market right now. And every time that happens, this chart starts circulating again. The one that shows panic, recovery, euphoria, and eventually a reset. Historically, environments like this haven't ended smoothly. If markets drop 30% this year, would my portfolio still make sense? Because that's the real question. And there are real reasons people are cautious right now. Valuations are high. When markets trade at these levels, future returns tend to be lower. That doesn't mean a crash tomorrow, but expectations are elevated. Margin debt is also high. Leverage pushes markets up faster, but it also makes declines sharper when the sentiment shifts. And then there is the yield curve. It inverted. That doesn't guarantee a recession, but historically, most recessions were preceded by one. So when people say this feels stretched, they are not being irrational. The concern makes sense. And when signals like this appear, that's when people try to figure out where we are on that chart. And here is where it gets tricky. The stronger the macro case sounds, the more tempting it is to act on it. Not panic, but adjust. Trim exposure, shift defensive, try to position a little smarter than the market. I understand that instinct, but signals rarely tell you when something will happen. Valuations can stay high for years, yield curves can invert for a long time before anything breaks, bull markets can stretch. The risk isn't the warning signal, the risk is slowly drifting away, solid plan. So, this is how I deal with it. In my portfolio, the core is broad, low cost index exposure. Nothing fancy, just diversified global equity. If markets drop 30%, those ETFs drop too. And I accept that. But I don't stop investing. I keep buying regularly and I cost average through volatility. Because if my long-term thesis hasn't changed, lower prices are part of the journey, not a signal to freeze. I'm not trying to avoid every downturn. I'm trying to avoid making a bad decision during one. Before I change anything, I ask myself, if markets fall 20-30%, does my portfolio still make sense? If they don't, does it still make sense? If the answer is yes either way, then I don't need to predict what happens next. And here, every cycle feels unique while you are living through it. AI feels totally transformative, valuations feel super stretched, macro feels totally uncertain. And maybe some of these risks will matter. Maybe they won't. But when I see charts like that, I don't try to figure out where we are on them. I focus on whether my portfolio works either way. And that's how I invest.